check in on Wall Street then, and minutes of the FOMC meet are squarely in focus today, but the street is also digesting the trade data number that pegs U.S. deficit at roughly $49 billion for the month of May, which is in line with expectations. What you are seeing on your screen is the Dow Jones Industrial Average, which opened in the green, but since then has slipped very marginally into the red. And like we did mention, all eyes on the street are focused on what the FOMC minutes have in it and whether there are indeed any hints of possible stimulus coming from the U.S. Federal Reserve before the end of the year. Now, to markets in Europe and Asia, and Reuters correspondents Kelly Lemon and Kathy Yang join us from London and from Hong Kong. Kelly, I'm going to start with you. The European markets going through a fairly tough day today. What's weighing on investor sentiment?
Well, it was a tough start to the day for equities as Burberry's Q1 numbers came in lower than expected, and that's really sending a bit of a warning shot across the luxury goods market, which has up until now remained relatively recession-proof. Now, Burberry stock is still in the red, around about 5%, and the sector as a whole is weighing on markets. But we are seeing equities across Europe rallying now as fund managers turn to more defensive sectors. Utilities and telecoms doing particularly well this afternoon, and banks are also aiding the rally. But bear in mind, trading volumes are a little thin today, so we are seeing sharper movements in the markets than we perhaps normally would.
Kelly, let's also look at the commodity space. Tell us how crude oil and gold prices are shaping up.
Well, yes, gold and crude are both enjoying a bit of a rally today. Gold prices are trading slightly higher, and that's thanks to a slightly softer US dollar. And that's really the main driver of gold prices at the moment. So remember, the dollar is still hovering around a two-year high against the euro. So a rally in gold prices is likely to remain pretty contained for the short term. As for crude prices, European oil futures up near the $99 per barrel mark, seeing a correction rather than a rally really after Norway restarted oil production after a 16-day strike. Now, Norway is the 8th largest oil exporter. Combine that with news that China cut its oil imports this month, and it's no surprise we saw such a drop in oil prices earlier this week. And now we're seeing the correction, which is really driving this rally rather than the fundamentals.
All right, Kathy, let's bring it to you. And I see a new low for the month among regional stocks in Asia, and we haven't even crossed over the second week of the third quarter. What's going on?
The global growth slowdown is starting to show up in companies' balance sheets. That's what is going on. Profit warning, for instance, from China Southern Airlines merely exacerbating what's already been an anxious buildup towards that China GDP data due on Friday, widely expected to be weak. We asked Mark Conan of CCAM if China's over the worst, and he said we're probably scraping on the bottom now in terms of where the economy is, and that he's expecting certain measures forthcoming from authorities. As you know, China's already cut rates twice. So we've seen a new low today for the month in the wake of a 4-day losing streak in U.S. stocks for the MSCI Asia ex-Japan Index, while the Nikkei 225 Index in Tokyo extended its losses a 5th straight trading day.